Hey everybody, welcome back to another episode of Coin Story. I'm Pete, and this is the market update for September. So let's take a look at gold and silver. It's good news, folks. Good news. So we got 43 to 44 per ounce on silver, which is amazing considering the jobs numbers have not been looking very good. And most of the silver that is getting dug up or getting smelted, or at least a good chunk of it, is going into manufacturing, and the other half is going into retail. So retail is driving this big push to silver. So the question is the economy getting better, which it seems not, or are people picking up silver because gold is too expensive? And I would have to say it is the latter. Gold is bopping between 37 and 38. Last week it just touched 38. So gold is quite expensive. And since people can't afford it, they tend to be going to silver. A lot of the shops are taking in a lot of silver. So the question is, when is the premium going to totally disappear? It hasn't. It's disappeared among those that are buying junk silver, but if you're still buying bars or Silver Eagles or Britannias, there is still a premium. So silver and gold looks good. The question is, what are the dynamics that are driving it? Well, so if we go all the way back to Biden, we see that the beginning of the Ukraine war and the freezing of Russian assets have caused central banks to take another look at whether they want to be in treasuries, in dollars. They have decided not. So all these central banks are buying gold. So they're increasing their investment in gold, and that tends to be driving this market. Also, we still have irresponsible governments, and our government now, the big beautiful bill, is going to be spending a lot of money. And that makes people nervous. So especially rich people that want to hold on to the value of their assets. So we see an explosion in the stock market and devalue a little bit in the real estate market. So the real estate market has been going sideways or down a bit. But gold and silver have been hanging strong. It's the safe asset. It's the asset when everybody panics. Whether you like our president or don't like our president, he is the president of chaos. And chaos is great for the metal. So you may like him because he's chaotic. You may not like him because he's chaotic. But if you're a precious metal holder, that's one reason why you might like him. The Coin Story podcast would like to thank its sponsors, Fondo Coffee, freshly roasted coffee every time, and GBD Marketing, engage, convert, and thrive. Let's take a look at some of the more notable pieces that sold in the auctions from Stacks and Bowers galleries this summer. We have a Oliver Cromwell 1656 gold broad pattern, 50 shillings, which sold for $396,000. Beautiful coin, very interesting portrait. The coin kind of looks a little, I guess. So Oliver, I guess he wasn't a very happy guy. We have a George the Fourth, 1826 proof pound, realized at $144,000. We also have a colossal Bavarian 8 ducats, 1598, which was realized at 96,000. Now, I want to talk a little bit about Oliver Cromwell. So this Oliver Cromwell piece is kind of interesting because Cromwell was a religious usurper. He basically signed the death warrant of King Charles I, fought in the English Civil War from 1642 to 1651. So even though the coin was minted at the Royal Mint, obviously he was trying to overthrow the royal family. Ruler of England till 1658 and declared Lord Protectorate, so basically a military dictator, and head of the Republican Commonwealth. So he was a strict Puritan. He banned all entertainment, so all theaters, drama, that was all stopped under Cromwell. So on the coin, we see 1656, the gold broad 50 shillings. It's not a regular issue. Cromwell in Roman-style armor, like a classical emperor. These coins are exceedingly rare and highly prized, so hence the value almost $400,000. Fun fact, in 1660, when the monarchy was restored, Charles II had Cromwell's body exhumed and executed by beheading. Fun times. His coins, however, survived and today are among the most sought after pieces in British numismatics. Rare coins and indexes, market strength. Let's take a look. The Collector's Rare Coin Index, or U.S. key date coins, is at an all-time high. A 771% base level increase relative to 1990. This suggests strong demand for blue chip rare coins, key dates, and well-graded pieces. The U.S. Mint 2025 laser engraved silver eagle created a lot of buzz. Limited mintage. Novel laser engraved master dies created a strong demand. But there are issues at the U.S. Mint. Number one, boring graphics. What's the deal with just the superheroes? Why can't we do something else like the Perth Mint? The Numismaster updated bullion and South African coin price data this month also introduced a high silver Somalia African wildlife leopard, 31 grams and 4/9 fine in different finishes, an absolutely beautiful coin. I can't understand why the U.S. Mint can't do more items. Let's take a look at market pressures. Silver volatility is more pronounced than gold, both because of industrial demand and supply chain issues. If the U.S. economy takes a dip, so will silver. So we also have to look at collector fatigue is showing in some areas. For example, the Royal Mint of the UK has reported losses in its commemorative coin business. Collectors seem less excited about the traditional themes, especially with the high gold cost and broader economic pressures. So what does this mean for global coin collectors and overall investors? Well, if you collect silver coins, ancients, colonial, modern, the rising silver price means intrinsic metal value is rising. This tends to put up prices for silver coins and beyond collector demand. Rare, well-graded historical silver coins, especially with provenance, or unusual features are performing well in top auctions. Limited modern issues with special features, privy marks, new die tech, special finishes are gaining collector interest and can sell out quickly. Be cautious. Rising metal prices can push the price points higher, making entry harder for new collectors. Also, macroeconomic risks, interest rates, inflation, and global instability may affect buyer behavior. So this part of my analysis is just for U.S. investors. I wanted to talk about the SALT tax from the big, beautiful bill. So it is limited. It is only for a few years. And basically, the SALT tax, in case you don't know, is the state and local deduction prior to or after the Trump tax breaks. It dropped to $10,000. Now it is up to $40,000. So that is going to affect your coin purchases. So obviously, the large majority of that is probably going to be going into stocks and bonds. But you can, I'm sure most people are going to be cutting some off to use in their coin investing. So just be aware that there is more money coming down the pike for the wealthier classes, the top 20%. So and that's what rich people need, more money, right? So anyways, I hope you enjoyed this episode of the Coin Story podcast market edition. And we'll see you next time here. Remember, every coin has a life and a story to tell if you're patient enough to listen. Welcome to Coin Story. I'm Pete. Coin Story focuses on the history of a single coin. Coins move through the ages from hand to hand and from decade to century. These coins represent the work and culture of the people that own them. Every coin has a story to tell if you're patient enough to listen. Take a little time out of your day and join me for a walk back in time. Every coin has a life, and each coin tells a story.